Hi, this is Shannon Grimm with Shannon Grimm and Partners at Howard Hanna Real Estate Services. We're here today with Eric Anderson, who is with Buckeye State Bank, and known Eric for a very long time. Eric has bailed me out in a few instances where another lender has let me down. So that's why we go back to Eric time and time again.
Thank you. Thank you.
And then, so Buckeye State Bank is a little bit different, right? You guys can do some things that not other banks can do.
Yeah, as a community bank, we can offer certain products that maybe the rank and file big box banks don't offer. Theoretically, it's a lot better service. Pricing's competitive, but it does allow us to do portfolio lending, which is typically loans that don't fit traditional FHA or government conventional lending.
Okay, it doesn't fit into that Freddie or Fannie box.
Yep.
And you've always been good, just yourself, because like I like to say, all loan officers are not even created equal within the same bank or the same company. So you kind of have to learn who actually knows what they're doing. And I've always learned that you're pretty good at what you do, and you can find ways to get things done that someone else might not be able to.
Right. Well, the trick is finding out the customer story, finding out where the troubles may be, identify them up front so everybody knows what's going on, and then working through those. But it's honest and immediate communication when you know you got a problem or identify it. So that's a big part of it.
Okay. And then Jennifer has been working with some investors recently.
So if you could go over some programs that you have.
Okay, so for investment property, you have to break down investment properties two different ways.
Okay.
One is traditional underwriting, traditional programs which would fit under Fannie and Freddie rule. Conventional lending, there is a way to do it FHA and VA with owner-occupied. But 1 to 4 family units can go conventional, and they can actually go commercial. It's not common, but they can go commercially. Any property that's over 5 units must go commercial.
Okay.
There's no discussion. It has to go that way. Conventional lending on investment properties, if you're doing a single family, you can get in with 20% down. It has to be held in an individual's name or a revocable trust. It cannot be an LLC. It cannot be an irrevocable trust.
Okay.
So it can't be an LLC even in a commercial loan.
A commercial loan, yes.
Okay.
So specific into conventional lending.
Gotcha. Okay.
30-year fixed, no prepayment penalty, those kind of things. Fannie, Freddie, it has to be an individual, has to be a revocable trust. Commercial, it's a sandbox. It varies by every bank. Some banks may have an appetite to do smaller loan amounts of $150,000, $200,000, $300,000 on a single family. Some banks won't want to deal with that type of product because it's that small. They're looking for apartment buildings. They're looking for 8-unit buildings, something like that. So while it can be done, if it's done commercially, it can be in an LLC. Typically, those are based on an ARM product of some sort, 5, 7, 10-year ARM. Typical amortization is maybe 25 years, possibly 30, but again, it's a sandbox. So it's whatever bank decides to offer for their commercial offering on an investment property, 1 to 4 family.
So what about if you're, I lost my train of thought. This happens more than I care to admit to, but it literally does. Go ahead, Jennifer, if you have any questions, because I've totally lost my train of thought.
Sure.
Yeah.
What was I saying? I don't know either.
One of the things with conventional lending, which nearly every bank has conventional lending, is that there's no prepayment penalties.
Now I know.
Commercial does typically have prepayment penalties or origination fees that could be more expensive. So
say you're doing a single unit commercial loan. How much would that be down? Is that still like 20% or 30% down?
We would start at 25%.
Okay.
And then based on strength of borrower, based on assets, based on experience of running investment properties, those kind of things, you can ask for 30-year amortization and 20% down, and you put your ask list. Once it goes into underwriting or based to the specific bank, they may say, well, we only do 25-year AM and we want 25% down. Because it can vary. Conventional, it's Fannie Freddie rule. The banks aren't going to deviate from that on the conventional side.
So what would you suggest to someone who's maybe looking at getting into rehabbing a property and they want to use, that old adage, someone else's money? So borrow the money to get into rehabbing?
Depending on the nature of the rehab, the trick is if you're going into contract and you need to close within a certain period of time, is being able to do a construction rehab, which means you have to know what the costs and the quotes are for the rehab, and then you can do a purchase construction loan, a purchase rehab loan.
Okay.
You can do that conventionally. You can do it either way, but conventionally you can do that. On a construction rehab loan portfolio, I shouldn't say conventional. So that can be done. We can do that. Portfolio banks can do that. But the trick is from the date going into contract to closing date, you've got 30 days or 40, whatever you've written in the contract, to get your quotes and everything, get that to the appraiser, and for the appraiser to come back and say, yes, your improvements are going to make the property worth X, and hopefully that meter exceeds the purchase price.
You said earlier that portfolio is when it doesn't fit into Freddie and Fannie. So just real quick, so in the MLS, we don't have an option for portfolio loans. And it's unfortunate because so many things have to go portfolio, like condominiums.
Yep.
So that's a big one. And
Non-warrantable.
right. So and sometimes we also take those to you as well. And we have another lender who can do those too for 5% down. Sorry. 5% down on a non-warrantable is a really good deal because it's normally 20%.
Yeah.
And that's what you've always helped me out on are the condos too a lot. But just what other products do you have too?
Well, for portfolio loans, that kind of falls under the conventional lending standards. When you're writing up a pre-qual letter at FHA, VA, that kind of thing. One of the products we do have for investment properties, which is kind of unique, it's a non-QM loan, so it's a debt service loan. So what that means is the fair market rent of the appraisal is all that is considered for income. So if you have somebody that, and I've got a customer that makes millions, uses the tax code legally, shows nothing. Well, in the non-QM loan, they put 20% down. They can buy the property. They're going to use fully whatever the debt service is or the income. So let's say the rent's $3,000. With his experience, it's a 1-to-1 ratio. So as long as the housing expense does not exceed the $3,000 or the rent cost, 20% down, you have some reserves, you get the loan. They don't dig into somebody making $100,000 and they can document. They don't even care about the tax returns or the W-2s. Now the rate's higher, but you can hold it in an LLC. It's 30-year fixed. It's no prepayment penalty. So it's kind of a blend of traditional conventional lending and commercial lending, but the rate's elevated. Because they're asking fewer questions, you can hold it in an LLC. They're not really looking at your personal income to see if you're leaking oil, you're taking losses on other businesses or other buildings.
So what does the non-QM, what does that stand for?
Non-qualified mortgage. So it's just, it's outside traditional underwriting guidelines in basic terms. So it allows them, they'll do more, they can do like some bank statement loans, those kind of things, not stated loans. But they'll look at bank statements and say, oh, you got $50,000 coming in a month. We understand what's going on here. So there's some things that fall into that.
Yeah, stated loans got us in a lot of trouble.
They did, and pay option arm loans and bad appraisal practices, bad loan officers with appraisers. So
and bad builder reps.
So they've weeded a lot of that
on.
out. So they've weeded a lot of that out. Got rid of the bad actors for the most part. So, but that non-QM may help somebody that they want to buy a property. They don't have, they've got 20% down, but they don't have the income or whatever to offset that. So they might have to hold their nose a little bit with the interest rate, but there's no prepayment penalty. But it allows you to acquire the property, hold on to it, and then when rates settle down, refinance it and maybe get better terms. But it allows them to complete the acquisition without having to show all their losses on their income side.
So say you have a first-time investor. What is the minimum, like credit score, that sort of thing, that you would need to get started?
Credit score on the conventional, let's just stay in the conventional side. If you start getting below 700, the rates start to get elevated quickly. Fannie and Freddie have risk-based pricing. So the lower the score, the higher the LTV, some of those things starts to drive your score up. So if I was going to, let's say best case pricing today on a 30-year fixed rate is 6.25, something like that. Your investment property rate's going to be about a full point higher, only because they factor that.
That's not horrible though.
So so if you're in the low sixes, you might be in the low maybe mid sevens. for the investment property. Well, if your credit's, and that's a 740 score, if your score is a 700 or 680, you can get it done, but now your rate might be even a half a point higher because of the credit score.
Interesting.
All right.
Any other questions
I
that
don't
you can
think
think
so.
of? All right. Well,
I'm
Eric.
not that good.
Well, we just wanted to touch on some investment stuff since we've had a lot of people reaching out to us about starting to do investments and stuff like that. Just wanted to get some basic information for people and for ourselves, just in case.
Yeah.
But we appreciate your time. So,
Happy to be here. Thanks for inviting me.
so again, thanks to Eric Anderson with Buckeye State Bank. And remember to follow, like, subscribe, whatever you got to do on any version of social media at Shannon Grimm Realtor. Thank you.